Hey, so what's up, guys? Did you guys hear about Uber and Lyft possibly going public in 2019? Well, apparently they're in a race to go public. Hey, as always, guys, remember that these thoughts and these opinions are of my own, and you are encouraged to do research for yourself, look things up for yourself, and not just take my word for it. Cool. All right, so Joseph Found here. Thanks for coming back to my channel. If you haven't been here before, I talk about money, I talk about investing. I pretty much talk about it in a simple form that anyone can understand. But not only do we give information, we also give tools to help people not just learn, but also do. So I happened to be just scrolling, doing a little bit of research and reading on yesterday, and I came across an article. The article was talking about how Lyft has chosen JP Morgan as one of their underwriters for their IPO in 2019. Now, if you don't know what underwriter means, it basically means, just a bank or, just serving a purpose between that company and possible investors. And they're just handling, transactions. They handle the evaluations of the company, and et cetera, et cetera. So apparently Lyft is going to be going public, and they're going to have their IPO at the beginning of 2019. And it's funny because I really haven't heard a lot about them, doing the things they need to do so they could go public. But I've always heard a lot about Uber. So Uber was actually planning to, go and do their IPO and, become public, sometime, in the middle of the year or the third of the year or whatever that means. But now since Lyft just said, hey, you know what, let's just go ahead and make this move. Now Uber's trying to beat them. So they're basically racing to the IPO, trying to see who can get into the stock market earlier than the other. Now, I'm a little bit excited about this. I've actually been waiting to see these companies go public along with a few other companies like Airbnb. But hey, who knows? You never know what happens when a company goes public. So when a company goes public and you're able to invest in them, it doesn't always mean that they're going to do great. Sometimes they do, and sometimes they don't. Sometimes it's good to invest in a company right when they initially start, and sometimes it's not. I know there's a lot of people out there with different opinions about that, but it just depends on the situation. So every situation is just not the same. For example, Facebook, that's an IPO I like to talk about a lot because I was able to get shares of Facebook at $32 a share. And we see where Facebook is now. It's around 150, 160. At one point, it was over $200 a share. So it's a significant change, significant growth. However, when Facebook went public, a lot of people just didn't know what the stock was going to do. They didn't think it was going to do so well. You had a lot of those people who sit on Wall Street, old guys who don't know anything about what's going on, just putting out all this information about, we don't think it's a profitable company and all these other things. So Facebook in turn ended up going down to like $18 a share. People like myself who were very in tune with social media and Facebook and the things that they were doing, decided that, hey, I'm going to buy some more. So I bought some more shares at $18 a share. And it turned out to be a really great investment. I still hold shares today at the price that it has, etc. I have taken some profits in the past, but all I'm saying is you never know what could happen with, a stock. But there's a few things that I like to use as just a basis to consider if I'm going to invest in a stock. So here are just a few soft things that I like to think about. One, the future of the company. Like, does the company have a future? Two, does it make sense? Three, how does the consumers feel about the company? Like, where is it going? Like, is it something that people can use? Is it something that people can, use for a long time, or is it short term? I had to consider things like that just to think about, the company and just if it's even worth me taking a look into. And yes, of course, the profit and the money that they make is also, very important. Are they able to be profitable? Do they have, too many, liabilities? Do they got more money going out than they got coming in? Some of those things are a factor. And sometimes companies, when they're just starting out, that's just how it is. But it just all depends. And sometimes I think it's okay for you to kind of go with your gut feeling. So let's say you might be interested in something that you want to invest in, but you're just not sure of it. There's nothing wrong with investing in it, but here's the thing, don't put all of your money into it. Have the mindset, if you're going to put money into something and you're just totally unsure about it, and that's totally up to you if you want to do that. Nobody can tell you what to do with your money. just understand whatever money that you put in, have the mindset that, hey, I could possibly lose it all. Now, in the stock market, it doesn't really work like that where you can just lose all of your money and you not know you're losing your money. You do have opportunity and time where you can, decide that, I'm losing money. Let me cut my losses and run. That is possible. However, you have to determine how long you're going to be in the stock, how long are you willing to see it through, how long you're willing to see what you believe happen, or if it even happens. And those things play a factor. If you're just trying to make quick money and trade, that's like a whole nother story, because that's a whole nother a level of analytics. Also, times to buy, times to sell. It's not necessarily the same as if you're just trying to invest money long term. So why am I kind of excited about Lyft and Uber? The reason is because Lyft and Uber has become like almost a necessity, like one of those things, those crutches that have, been built into our society, where now, people need it. People use it every single day. If you were to take it away today, like what would happen? How would people get to work? How would people, do whatever they're doing when they use Lyft or when they're using Uber? What would happen when you take that away? We saw what Lyft and Uber did. It totally almost obliterated the cab industry. The cab industry is still around, not doing as well, but you can see what happened. People prefer Lyft and Uber because of its convenience, because it's through your phone. You're not looking through a phone book. So it's playing a significant role in a lot of people's day-to-day life. And then it also has that same factor that I like about Airbnb, where it gives an individual a way to, start a business, to make money. Like if you have like Airbnbs, like if you have a place that that you've been trying to rent out is not going so well, you can go register with Airbnb, look at all the specifics and yada yada yada, and then be able to actually rent that place out if people need to come there for that time. And sometimes that rent or that fee that people are paying to stay there for a week may take care of a whole month worth of the mortgage on that house that you're using. All I'm saying is it has the same factor where it's giving people an opportunity to make money from something that they, it's fairly simple. Like, if you have a car, whatever the requirements are, you're able to go driving and you can start your own business. And so I like that about Uber and Lyft, because it's simply just tuned into how we live our day-to-day life and technology and how things are right now. How they do when, they go public? I don't know. I have my own personal opinions about that. I think, they may have a little struggle, but I think overall they may do okay. Now, whether they become like your Amazons or, a company like that, I don't think they'll go that far, but you never know. So for me, yes, I cannot wait for them to go public. I have absolutely no problem with putting some money in both of them, because I think where it is in today's society, it's going to, do pretty well over the long haul. But that's me. And like I said, you have to pick and choose different times you might want to invest. When they go public, you can wait a little bit and see how things go. If you just gun ho and you just ride with it to see what happens, hey, then you can invest, right then and there when they go public. But for me, I'm kind of watching the situation, trying to pick and choose as this situation happens, as it unfolds, because you really never know, if they're actually going to go public. But it looks like it's serious right now, like, because look like they're trying to compete with who can get it through first. Like I said, Lyft, they already chose their underwriters. Uber was still trying to figure it out. And so I'm sure like right now they're like, hey, let's just make a decision to get this done. And so Lyft was actually evaluated as $15.1 billion. Meanwhile, Uber's evaluation is around like $120 billion. Now, that can change. That just means, basically, how much the company's worth. That's what the underwriters kind of, make the decision on, like what they think it's worth. Now, both have had some struggles with being profitable because, they're paying out money, they're paying out incentives, etc. They've had issues trying to get their foot like really in the game. They may have seemed to be around for a while, but they're still fairly new. So there's a lot of changes that both of them have been working on corporate-wise. But last year, Lyft gave 375 million rides in 2017. And then Uber did 4 billion rides. So that's a big significance, between who's giving more rides and, than the other. But even still with both of those, you can see that's still a significant amount of income. if you were just to multiply, those numbers by, 10, you can see that's a lot. Of course, factoring in the expenses, employees, and those that have businesses with those companies, drivers that are also getting paid, they get a certain percentage of each trip. So it looks like these companies have a really good potential on being, very profitable, highly profitable. They both offer other things that you're not familiar with. For example, like Uber offers things like Uber Freight. So they just have an array of different things, and you never know who's going to be partnering with these companies. Like, for example, in a previous video, where we were doing a review, we saw Uber had one of the investors that they just had was Toyota. So why is Toyota investing in Uber? So you just never know. But it looks like it's about to happen. I'm kind of, pretty excited about that, and just going to be watching to see how things unfold. But yeah, it looks like Uber and Lyft are definitely going to be going public, and it's something that a lot of people have been kind of waiting for, especially they want to see how these companies do. So hey, feel free, let me know what you think. I'd love to hear your thoughts about that, about Uber and Lyft going public. Is it something that you would invest in, or if there's something that you wouldn't invest in? And as always, see you guys on the next video. Peace.